I'm Clinton Griffiths. New signs the ag economy is still under a great deal of pressure. With grain merchant Archer Daniels Midland, the latest company to announce job cuts. Reuters reporting the Chicago-based company says it's making a fresh wave of job cuts this week to its largest unit, the grain trading and oilseed processing division. But it's not known exactly how many jobs were impacted. It comes on the heels of the company saying in February it would cut up to 700 jobs, or about 1.7% of the company's global workforce, along with cutting costs by $500 million to $750 million over the next 3 to 5 years. Now this after the company posted its lowest fourth quarter adjusted profit in 6 years. In Syngenta, coming off 2024, where overall farmer income was lower and distributors and retailers worked to cut inventories, posting a drop in sales and profit for last year. The agrochemicals company reporting group sales slipped by 10% to $28.8 billion, while operating profit was down 15% to just under $4 billion. But it says it expects the crop protection market to stabilize this year. Taking a deeper dive into what these numbers mean, are these more signs that the ag economy is in recession? A growing number of economists we spoke with are concerned the U.S. could see a recession this year due to the administration's heavy use of tariffs, which could weigh on the overall economy. According to Farm Journal's latest Ag Economist Monthly Monitor, 62% of ag economists think the row crop side of agriculture is already in a recession, and 85% say of those surveyed think it will accelerate consolidation not only on farms but also agribusinesses. And this has the ag lenders worried. The March Rural Main Street Index from Creighton University found 2/3 of rural bankers expect 2025 farm income to decline, with a third year of low corn and soybean prices. Now, we spoke to one ag lender located in Northwest Iowa about the situation this week.
You know, the end of the year last year was rough, but looking at projected cash flows for 25, we see that looking even worse, unrealized, of course, but definitely looks like it could be a challenge.
McCabe told us ag is always full of uncertainty, whether it's the weather or markets, but you add in tariff concerns and the potential impacts from a trade war. McCabe says that's difficult to forecast.
You definitely can't. You just hope that your customers will take advantage of opportunities when they see them in the market.
It's not just the ag economy where concerns are sprouting. It's also the general economy. Turning to our ag economists again, take a look at this. 62% of ag economists think the U.S. general economy will see a recession this year, and that could impact meat demand. But why is the ag economy fading? Well, one reason is the economic impacts of a trade war. NCGA chief economist Krista Swanson says it all comes down to how long it lasts.
If you dig into some of the comments that were made when, it's hard to answer sometimes a yes/no question like that. Yeah. And, I noticed one that said you might win, but the risks are really huge, so there's that possibility. We're just talking about what is that risk. And also another comment was, it depends on if the trade if the tariffs end up, what's their end result? Do they end up reducing trade barriers or do they end up adding to the trade barriers? So, I think that ultimately one of the big deals when I think about longer term impacts is, even if this is short lived and we could say there's some benefits coming out of it, sometimes you have relational damage with trade partners that is really hard to restore.
And a new reading of U.S. consumer confidence continued its decline this year as Americans' views about their financial futures fell to a 12-year low, driven by rising concerns over tariffs and inflation.